gold is always a common asset where people like to rush when economy is not doing well. No, if you just look at what the IMF, economic growth is not going to be fantastic. In fact, I think certain countries are going to recession. Another key factor why gold is so important or hot asset right now is because if you have feel the effect, inflation is a big concern in this year. So a lot of commodities actually hit pretty high prices. So these are all keep pushing inflation higher. So when you have high inflation environment, where do they go? They go into gold as well. So therefore, I think this is quite a good time, to look at the gold market because on one hand you have weak economic growth, on another hand you have a period of high inflation. The reason is, I'm not saying that you shouldn't trade equities or you should be trading commodities. I think that's not the main focus here. But I just want to give you an illustration. Now, if you compare commodities and equities, those days I think before COVID or during the after the financial crisis back in 2008, a lot of people actually look at equities. They don't really look at commodities until recently. Reason being is because most of the time commodities doesn't outperform one. If you compare to equities, usually it perform better. So in that sense, a lot of people shun away from trading commodities. They actually trade more in equities market. The good thing is that commodities is actually now gaining more popular. So if you are someone new to commodities market, I think now is a great time to explore and to learn about the market. Back in early 2000, we see a super boom in commodity cycle because that's the rise of China. Then after that, after global financial crisis in 2008, things start to change. Commodity prices start to collapse right until COVID. Now, if you remember COVID, you recall during the peak of the COVID era, you notice that a lot of this commodity actually hit all-time low. You look at crude oil, it went to negative for the first time in history. Now, commodities is not only limited to whether it's talking about palm oil or corn or soybean, it's also talking about gold. So when countries starts to open up, a lot of these commodities actually start to increase. So I think now we are in a cycle where we potentially can see commodity prices is going to stay at this level. It's very difficult for it to go down to pre-pandemic level because the condition has changed. And I think that's going to be a problem for inflation. As long as commodity prices are still high, inflation is going to be very stubborn. There's a lot of indication that weaker economic growth. One of the key indicators is global trade. So as long as the global the trade is not that healthy, that tells you a lot of countries is slowing down. If you recall, during the height of the COVID-19 pandemic, you notice that to ship one shipment from China to US, it actually costs if you compare to pre-pandemic level, it's like almost like 10 to 15 times, which is a lot. But I think those level or those prices have started to ease off. I think now it's almost to pre-pandemic level. So what this tells you is that because of the COVID-19 pandemic, the supply was at first initially in the beginning was very tight, but that slowly started to change. Demand also starts to get weaker because despite all the economy reopening, I think everybody is also being quite cautious because the interest rate is also very high, inflation is also very high. So all these are actually pushing demand lower. So therefore, I think you can see that the global trade itself is actually not going anywhere. In fact, it's going back to pre-pandemic level, which is a concern. So as long as global trade is not picking up, you don't expect the economic growth around the world to pick up as well. So this is, you want to understand when the economy will start to pick up, look at this global trade.